The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got 24 minutes to go until the opening bell, and we got markets in both directions right now. All the markets actually clawing into the green in the last few moments before I came on the air. We have the Russell up by 1 right now. We have the Dow up by 52 points right now. NASDAQ up a solid 0.6% for the NASDAQ 100. You're trading up 83 points, 14,965, and the S&P as well, catching a bid to 4404. You're positive by about 14 points. I'm going to put it on a minute chart just to see the type of volatility that we got for the jobs number. It started about 3 minutes prior to that number. There's your 830 bar in the S&P. We came into that number just at about 4,400. And you can see we got about 20 points of movement, one direction, 2, 3, and 4. We're right near the highs that we had about 20 minutes ago at 8:40 in the morning. All the markets taking the number. They like it. Let's jump over to the headline number. 194,000 jobs added in the month of September. That's a miss. The market was looking for about 500,000 jobs. ADP, private payrolls earlier in the week had a nice beat. Private payrolls had a nice number in here. There's some seasonality going on in this, having to do with education, teachers, throwing a little bit of a cloud over that. Nonetheless, we have some action across the board. We have the unemployment rate falling to 4.8%. The expectation was for 5.1. That's the lowest since February of 2020. We gained 194,000 jobs, but look at that chart. Talk about tailing off. The last 2 months, we had 366. That's a revision for the month of August as well. September comes in at 194. We were looking for about 500,000. As I stated, let's jump around to some of the things that are moving on that news. Crude even having some action to the upside. We had some dollar action in a big way with the dollar trading lower. I'm going to pull that up as well because gold is trading higher on that news, and we'll jump, of course, to notes and bonds as well. As I jump to the dollar index real quick, as I pull this up, taking a look at that chart. So we look where we were. You see a little 8 a.m. volatility. Right now you have the dollar index down about 20 ticks at 94.01. Now we jump. There's your gold action, trading higher in a big way. We spiked from about 1760 and change. We're trading at about 1780 right now. Gold was at 1755 earlier in the week. We're going to put gold on a daily just to see the acceleration we're now getting to 1780. Maybe it's on its way to about 1836 would be the next stop. That's the highs we have early September, correlates to the highs in late July, as well as the middle of that month as well. Now, let's jump to notes and bonds on the jobs number as well. We put it on a 5-minute to see the action this morning. We're getting a little bit of higher price and lower yield right now in the bond market. You're talking about a yield of 1.57%. We're up basically 3 or 4 ticks, so no real huge reaction on this number. The market's in positive territory after oscillating in both directions. Jobs number coming in under 200,000, but the market liking that and taking it and running with it in terms of where you go. Unemployment rate. That's what we're talking about. The lowest since February of 2020, 4.8%. I think we're at 3.5 when we came into the COVID pandemic. Now, wages, monthly gain, 0.6%. Year-over-year increase, 4.6%. It's quite a rise in wages, folks. Look at that. We got a 5% rise in wages. You're going to tell me inflation is not around when we got a 5% yearly rise in wages? Be careful, because that's year over year against October of last year, before we even had any news in terms of the efficacy of the vaccines. That came about November, beginning of November in 2020. But nonetheless, you're talking about 0.6% for the month. That's quite a monthly gain in wages. That's something that the Fed's going to be watching if it persists. The available workforce declined by 183,000, 3.1 million shy of where it was in February 2020. So there's the number to keep your eye on as well. The available workforce declining, and 3.1 million under that number prior. I don't know if we will get back there anytime soon. I was talking to a friend this morning just saying, there's a lot of people, as we all know, that left the workforce weren't planning to maybe leave the workforce and might not be coming back. Maybe you're early on retirement. Maybe it's people with two parents at home that they said, you know what, we're going to stay home with the kids with all the volatility going on in schools. Nonetheless, now leisure and hospitality led with 74,000 positions. Professional and business services contributed 60, and retail contributed 56,000. So July's already strong gains were revised higher. That was the one above $1 million. And you had August revised up to 366 from 235. So there's 130,000 jobs in August that you add, okay? And you add the 138. So there's about 170,000 jobs in the revisions just for the last 2 months. You add that to the 194, you're pushing almost 370,000. Changes the story a little bit, right? The revisions aren't talked about enough when the headline number is a big miss for the month of September. But the reason why is because September, kids were still supposed to be back in school. The unemployment benefits stopped September 3rd. If that was the thing holding everybody back, like a lot of people said, we have under 200,000 jobs added in the month of September when those benefits ended September 3rd. I think it came back on Labor Day was the official day they ended. Nonetheless, seems like the Fed will be on course for everything they've imagined. So, as in probably going to begin tapering when they meet in early November. Nothing too dramatic in there to cause them to raise rates anytime soon, though. So the market kind of has a sweet spot there. The NASDAQ liking the action as usually. I said, all you got to know, I was texting a friend this morning. They said, do I even want to know? Because they said there was a jobs number miss, right? It's a group text. One of my friends chimes in, do I even want to know? And one of my other friends explains the headline number, et cetera. And then we started saying, all you got to know is that the NASDAQ never goes down, man. The NASDAQ only goes up. And I kid, folks. It only goes up until it goes down, as we've seen recently. But, man, you're up more than 0.5% right now in the NASDAQ. Let's jump around to some of those FANG stocks. Amazon shares up by about $17 at $33.20. We jump to Microsoft shares right now, trading higher by about $2 to $296.50. We jump to Apple, the big dog right now, up to $144.11 from $143.29. All right, let's jump around to what else we got going on. There's your jobs number story. We will jump to, how about Bitcoin? Now, jumping back to Bitcoin, talk about some strength here. Back above 55,000 overnight. You almost made it to 57,000. I didn't realize the ETFs, and maybe this is why you're getting in front of the market. You might have 4 Bitcoin futures ETFs by the end of the month. Talk about waiting and waiting and waiting, and then a cascade of them. Anticipation's building. The SEC approval may come this month. ProShares, Valkyrie in promising position. That's an analyst talking about, but you might get 4 of them, which is remarkable in terms of what you're talking about. And there's some of the ones that potential approval dates. October 18th, 19th, and 2 on the 25th. And then we might have one coming November 1st as well. And there are your odds of getting approved from an analyst out there. I believe it's Bloomberg Intelligence is what the BI stands for there. And you can see some of them a little bit outliers. Looks like Van Eck, 20-1. I wonder what the difference is here. Some of these companies, why ProShares has got a 2-1 and Van Eck's got a 20-1 in there as to how they're structured. Nonetheless, Bitcoin continuing to trade higher, 55,300. As I talked about yesterday, up in this upper boundary line. All right, folks, stay tuned. It's Jobs Friday. We got 15 minutes to go until the opening bell. We'll come back. We'll take a look at the equities moving on Friday. Get ready for the opening bell. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps up 10 points right now, trading right at about 4,400. We have a high of 45.49. You see the acceleration this market has got just even in the last 4 trading days. October 5th, you back it up. We had a low in this market of 42.69. You're coming up to, when we put it on a 15-minute chart, coming up to whether it's the levels we had right near the close of yesterday, just zooming in. Now, that's a 5-minute. Let's put it on a 15-minute just to zoom in on yesterday. And today, we're trading at 4,400, kind of right where we were coming into the close of yesterday. Traded higher in the morning, pulled back in the afternoon, and we've been chopping around without about a 10-point to 15-point trading range in the S&Ps right now. Pretty tame reaction on that jobs number as you look to the market, probably pricing in that the Fed stays its course. They pare back some of the asset purchases that will start in November. Now, this is just the expectation, folks. The market pricing in right now. We'll see how things evolve as the next month marches on. We don't get a Fed meeting until the beginning of November. Less than 200,000 jobs out in the month of September. We got a lot of jobs to fill. There was a lot of rhetoric out there saying that you pull those unemployment benefits, people are going to come back to work. That's why they weren't working. There were people on the other side saying that was not as big of a factor as people were alleging. We get less than 200,000 jobs in the first month. Maybe there's some delay in terms of those jobs benefits expire beginning of this month. Maybe those take a little time and they transition into trickle into maybe the October or the November numbers. But nonetheless, we got millions of jobs to make up, folks, until we get to those pre-pandemic levels, and the market only adding 194,000. But the market liking the idea that maybe inflationary pressure, not as much as we imagine. Transitory is the word that is in vogue, and the Fed probably doesn't need to pare rates anytime soon, especially not sooner than expected, when we're definitely not adding the jobs numbers we thought. The one thing to keep your eye on is those wages, 4.6% on a year-over-year basis. You have some weird comps a year ago, 0.6% on a monthly basis. That's going to compound pretty quickly, folks. 0.6% on a monthly basis. When you push it out 12 months, we start getting numbers 0.5, 0.6, 0.4, anything like that on a continued basis, on a yearly basis. That will contribute to some pretty extreme wage pressures. Combine that with all the other pressures going on, and I don't think you get a pullback in that transitory nature, as in we're seeing higher costs across the board for commodities, inputs, car prices, which will probably pull back to some degree. But when you have wage pressure also in a higher territory, you're going to have people earning higher wages, which is going to support them spending more money, whether it's on rent, cars, crude oil, food, meat, eggs, all of the likes. All right, let's jump into what else we have going on in terms of headlines I have up here. Something to keep your eye on. Poland out there. So I was reading about this last night. You have the judges ruling in a case brought by the country's prime minister that national law has primacy over European rules. Just a little some simmering angst over there in Poland. And I wonder if, the headline out there is talking about raises the concern over a possible exit. That's not how the EU is going to see it in terms of the Polish laws superseding the European rules. Opinion polls show that Polish voters are overwhelmingly pro-European, so far different from where you were in the UK coming into their Brexit vote. But the Polish government also claims to be supportive of the EU project, but its action does raise questions about whether that's really true in terms of you go to the court. The European Commission, an executive arm of the EU, and the conservative government in Poland clashed for several years over the rule of law. Brussels have accused Warsaw of undermining the independence of the judicial system. I mean, these are common themes when countries get into tiffs with the EU and talk about leaving. In the latest escalation, a case brought by the Prime Minister, the national law has primacy over European rules, and that's not exactly the way it works, according to the EU folks. So seeing how that plays out will be interesting as that goes forward. All right, other stories I have up here in the sneaker world. Jordan, good old Michael Jordan. Rookie sneakers expected to be the most valuable ever at auction. Sotheby's is going to sell Michael Jordan's earliest worn pair of Nike Air Ships, estimated to sell between $1 million and $1.5 million. That actually doesn't seem too staggering, right? I pulled this up earlier. I know that sneakers are almost turning into a collectible asset, depending on which one you have. And I know they sell for some ridiculous sums of money, so I'm surprised to hear that Jordan's earliest worn pair of Nike Air Ships only selling for maybe $1 million. But today, Sotheby's is going to open advanced bidding to auction off Jordan's first pair of sneakers worn as a pro, the red and white Nike Air Ships, earliest regular season pair of Jordans to come to market. And of course, it's a Jordan. There's only one Jordan out there. The current record for a pair of sneakers is only $615,000, which was back in August for a pair of Nike Air Jordan 1 high game worn sneakers in 1985. Good old Jordan at the top of the game always. All right, what else do I have up here? Jumping down some of the equities that are moving today with some news. We started off with Tesla moving to Texas. That seemed like that was destined to come anyway. I think they started using their Texas address in their byline for press releases recently, but no hiding Elon Musk's angst in terms of his battles with California. They'll be headquartered in Austin now. Tesla, quite an acceleration this thing has had from the run from May. You were down at 563. You're pushing 797 this morning. That's going to be a recent high that we haven't had since back in February of this year. And you're now coming into this consolidation area, maybe this top area, you could say, above 800. We were at 800 for a very, very brief period of time. Just to refresh your memory, we came into the S&P 500, there's your day, December 18th. Remember, all the talk was like, man, how is this thing going to sustain when we just went from 400 to a price level of above 600 when it's going to enter the S&P? You actually accelerate from 7 to 900 following that. You give it all back. You give it all back by March. And, man, this thing is just taken off to $800 for Tesla shares. Remarkable. All right, jumping down the line, no real huge reaction. Economic news, no real companies out with their numbers too much. Allergan Therapeutics, they're trading lower after the FDA placed a hold on the company's cancer drug trials due to a chromosomal abnormality in a single patient. Not what you want to hear for some of those biotech companies. You have an acquisition, Chubb. They're buying the turkey business of rival insurer Cigna. Oatly got a upgrade from JP Morgan to overweight from neutral. They note the 49% drop from the June peak now views the upside potential as far greater than the downside. OTLY. It is cool. Some of these. That's the full run. Did they say 29 or 49? 49% drop from the peak of 29 to $12. You're getting a pop today, though. That's yesterday's acceleration with the market to 1473, and then you get that for an upgrade. We're up to 1570 on Oatly. Pulling up the Analyze tab on this company real quick for the fundamentals. We're talking about right now a $9.2 billion company. So you got some growth priced in even at these price levels. Remarkable that you got up to $29 when you talk about the valuation. But oat milk, almond milk, I'm a big fan of almond milk. I do like dairy to some degree, love cheese, nothing wrong with it. But dairy in general is not the most healthy thing for you. It has a good amount of protein at times, cheese as well. Everything in moderation. I've tried to do less dairy in my diet. It's been something that I think is super healthy. I've talked about before, I went completely vegan for a period of 6 weeks. And the one thing that I came out of that with really enjoying, besides a break from the meat and giving your body a break sometimes is a good thing, the one thing I really enjoyed is having less dairy, actually, overall. Didn't realize how much dairy I had in my diet until I became vegan for 6 weeks, and I had to discover that there was basically dairy in just about everything I was eating. When you add up cheese and butter and milk, it's almost in anything, folks. So nonetheless, Oatly, diversifying some of that. Oat milk, almond milk, the likes, they have a future for sure. Stay tuned, folks. When we come back from the market open, it's Jobs Friday. We'll see what happens. Markets in positive territory. I'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the markets in positive territory as we open trading on Friday, non-farm payroll Friday. The S&P is up almost 12 points right now at 4402. We'll put it back to a 5-minute chart to see the volatility as we open, right where we kind of started in terms of where we came into the 830 number, right at about 4,400. You see the volatility starting at about 820 prior to that jobs number, but pretty much in line. You get the NASDAQ up about 48 points, giving back some of the gains we had on that initial thrust upward. We almost made it to 15,000. We're trading at 14,916 right now. We have the Dow up 13 points. All the markets, a little bit of a sell-off as I speak. It took about 50 seconds for the market to figure out which way it wanted to go, and right now, at least, it wants to go down. Commodities, look at this run in crude. $79.92 made in the last few minutes right now. We got gold trading higher as well, up to $17.80. We just hit $17.82. And let's jump to notes and bonds. As we open up, we're getting a little bit of a pullback right to where we were at about 8:30 right now. And you're talking about a yield on the 10 years. I pull it up, 1.593%. We're approaching 1.6%. I think we're just above 1.6% when we came into that non-farm payroll number. All right. So I talked about Bitcoin. We'll take a look at Bitcoin real quick because I'm going to talk about Tether real quick. Bloomberg, interesting article out there yesterday. I think they had it. There's your action on Bitcoin, 55,230. Let's check out Ethereum, which are the two I like to follow as well. Ethereum, actually flat right now, 36.39. Not bad, though, considering you pulled back to below 2,000 back in July. You actually pulled back to below 3,000 as recently as September 30th. So quite a pop over there. The article out there from Bloomberg, and we're going to scroll up to the headline first. Anyone seen Tether's billions? A wild search for the U.S. dollar supposedly backing the stablecoin at the center of the global cryptocurrency trade and in the crosshairs of U.S. regulators and prosecutors. Basically what they talk about is they're supposed to have $69 billion on hand that is tethered to the value of the cryptocurrency Tether. Okay, it's a stable coin, supposed to be backed by $1, but it's actually more like a bank. The company that issues the currency, Tether Holdings Limited, takes in dollars from people who want to trade crypto and credits their digital wallets with an equal amount of tethers in return. Once they have tethers, people can send them to cryptocurrency exchanges and use them to bet on the price of Bitcoin, Ether, or any of the thousands of other coins. It's kind of a currency within crypto that is standard because it's tied to a dollar, it's stable, it's a stable coin. Hence the name. At least in theory, Tether Holdings holds on to the dollars so it can return them to anyone who wants to send in their tokens and get the money back. The convoluted mechanism became popular because real banks didn't want to do business with crypto companies, especially foreign ones. There's a lot of foreign ones, as you know. How Tether's backed, though, or if it's truly backed at all, has always been a mystery. For years, a persistent group of critics argue that despite the company's assurances, Tether's Holdings doesn't have enough assets to maintain the one-to-one. Now, there are 69 billion tethers in circulation. 48 billion of them were issued this year. Okay, that means the company supposedly holds a corresponding 69 billion in real money to back the coins. Now, one of the things they also talk about here, and this is a big article that I can't talk about all of it within the context of the show, but it's really important if you think that you have some form of real backing in terms of safety and security in the cryptocurrency market, you better get your head checked because there's no such thing, folks, when you're dealing with unregulated exchanges in unregulated currencies, okay? It could all disappear overnight, and I encourage you, if you have a lot of money in that market, to think about whether you're okay and you're quantifying the level of risk that is appropriate for that money that is unregulated that could literally disappear tomorrow, no matter what you're in, okay? Because if it's in Bitcoin, who knows where you're holding those Bitcoins? I mean, the only way, I guess, if you're holding it in a hard wallet yourself, right, then yes, you have much more control. That's the way I'd encourage you to do it, even though I don't understand it completely. But do not trust it to an online company in any way. But to get to the point, that would make them one of the 50 largest banks in the country if it were a U.S. bank and not an unregulated offshore company. That's where your money is, folks. If you have Tether, okay, it's not tied to dollars. It's in an unregulated offshore company. They also have the ability, I believe, or at least they used to. They've changed their website recently. There's been so many stories written about Tether where maybe it can be backed by dollars or investments of some kind. Now, as they get into this, right, the bank of crypto, okay, Tesla had to settle with the New York Attorney General. That's on their website as well. But here's where I want to get into. Elsewhere on their website, there's a letter from an accounting firm stating that Tether has the reserves to back its coins, along with a pie chart showing that about $30 billion of its dollar holdings are invested in commercial paper short-term loans to corporations. Okay, so it's not in dollars. The value of those could fluctuate as well. Right away, your stability, your stable coin is really as stable as a commercial paper loan, which could be stable, okay? But we're dealing with a pandemic here. Everything's volatile. It's not backed by U.S. dollars sitting in a bank account somewhere that you can just cash in. But just the commercial paper, that would make Tether the 7th largest holder of such debt, right up there with Schwab and Vanguard, okay? So Bloomberg's looking into this. To look into it, they go to the Wall Street traders to see if Tether's been buying any of that short-term paper, and it's a very small market sometimes on Wall Street, folks, and nobody's seen anybody to that degree of that player, right? It wasn't clear which regulatory body is responsible for overseeing them, but you have a chief investment officer of global money markets at Federated Hermes, an asset management company in Pittsburgh. If there were a new entrant, it would usually be very obvious to that degree. Tens of billions of dollars of short-term corporate paper. So it's a long article. There's a lot of great stats in here in terms of talking about what is going on. You know, it was hard to believe that people had sent 69 billion real U.S. dollars to a company that seems to be practically quilted out of red flags. But every day on crypto exchanges, traders buy and sell Tether coins as if they're just as good as dollars. They're not. It's an unfortunate fact that might come to roost at some point. Some days, more than 100 billion in Tether changes hands. So buyer beware across the board, folks. You know, if you think that an offshore unregulated company in the crypto world might not be up to harm, and you think they got $69 billion stored somewhere and nobody can quite figure out where it is, buyer beware on that one in a big way. All right, let's jump back to these markets, because guess what? They're all red now. Action, but pulling back from the highs we had. We're coming down to the lows we had pre-market right now. We were up to 44.05. We're down about 20 points from there at 43.85 in the S&Ps. Tech stocks trading higher as well. 14,852. The Dow negative by about 87 points right now. Russell negative by 10. Crude holding up to those highs. Almost made it to $80. Actually made it above the highs we had on Wednesday though. 79.57. Gold 17.77, pulling back a bit. And let's check back to notes and bonds as we're giving back all of the spike we had right now, back to where we were right at 830. We're talking about a yield of about 1.6% on the 10-year. And let's take a look at the VIX as the market spikes lower. VIX had an 18 handle on the open there as things looked rosy. But right now, 1929, on that volatility index. All right, folks, stay tuned. We come back, take a look at some of the equities that I've been watching this morning. We'll see what's happening on a Friday action. We get some volatility. S&P's flat. Tech stocks in the red of 57. Right back, folks. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Just like that, we got the markets back in the green. We got the S&Ps up by 8 points. We got the NASDAQ 100 up by 30. Quite an oscillation we got going on a 5-minute basis. You see where we are in the NASDAQ 100, 14,910. S&P's got a pretty well-defined range right now. I'm actually going to put it on a 1 minute and back the action up just to 8:30 to see the action we had. Pretty well defined. The upper boundary line about 4,400 to 4,405. The lower boundary line 43.85. You're talking about 15 to 20 points. We'll see if we can break above or below that trading range. But right now, if I'm watching that market, I'm thinking about selling at 44.05. I'm thinking about buying at 43.85. Stay the course, it seems, on the S&P right now, as in pretty much par for the course that the market liking what happened when you think about the implications. Not too hot of a number, not too hot of a wage number for the Fed to have to deal with possibly pulling back on the rates anytime soon. Nonetheless, a decent enough jobs number, especially when you add in the revisions, folks. You got to add in those revisions for the last 2 months because that's almost 170,000 jobs revised. That comes in about 370 that we increase with some seasonality in there as well, which complicates things a little bit as well. All right, let's take a look at some of the equities I like to take a look at. We'll start it off with Disney shares. Disney, from Wednesday to Thursday, you're talking about some action up to 179.63, putting this thing on a daily. I've been talking about in my newsletter, Rocket Equities and Options. We do own this, folks. If you're looking at Disney, that 170 area, talk about a nice area of support since about May. You pulled back from the high of 203. That also correlating right at the 382 from the run we had that really began a year ago. November, when the markets took off, you had Disney trade from a price of about 117 to 203. Been chopping around between this area of 170 and about 185 for the better part of almost 5 or 6 months. Disney shares down about 0.2% right now. Uber's had quite a pop recently, breaking out of its downtrend. Uber, as some of the travel stocks, this thing really started accelerating with the Merck pill as well, which all the travel stocks and social stocks got a boost on that. We have Uber up about 0.1% at about $48 right now. Some of the other stocks I like to take a look at, McDonald's, for instance. McDonald's, talk about some strength here. We just made a high. I think that's an all-time high at $249.95 just yesterday. Yeah, it sure is. $249.95 for McDonald's. These are some equities we have in my newsletter, folks, as I talk about them. Taking a look at the 3-year weekly, McDonald's, looking at an A to B, C to D, you're talking about 255.76. We're coming up to that area. You pulled back initially from November to March. Now, remember, you had some serious growth stocks taking off, right? Look at what McDonald's did from November when the market just skyrocketed. McDonald's, real estate company, a dividend company. But, man, once you got ahead of that, you had some rotation. You've now gone from about $200. I mean, you're up 25% in McDonald's from where we were in March, on top of being a dividend play as well. Now, Walmart This one we've given back some of the gains. Walmart, though, catching a little bit of a pop. You're positive today. That's the weekly, because check out the action on a daily basis. There's your boost. Yesterday, Walmart, the last 2 days, you're talking about trading from under 136 to over 140. We're trading at 139.35. Now, backing this out a bit, Walmart, the lows back in March, the 618. I love the 382. I love the 618, folks. Look at this. An area, right? If you have the patience, it was a nice pullback. We had an area of support that tied us back to May, an area of support that tied us back to June. You trade all the way up to 152. You pull back to a 618, that or thereabouts, and we bounced nicely to 139. Walmart, a dividend company as well. And Salesforce, this thing has been on fire. Now, Salesforce, we have to back things up to see the real run that this thing has had. You really accelerate. Amazing that this is 14 months ago. I remember the day that Salesforce came out with those earnings, and this thing traded from almost 200 to 280. Now, putting it back on a daily, there's your gap when they came out with the numbers. You trade all the way back to 208. Zooming in on the action there, it actually completed an A to B, C to D, folks. The A point in May, you get the B point in Salesforce at July 7th. You pull back to a C point of July 19th, and this thing just plows higher to 286. We might consolidate a bit. They just raised their outlook back at the end of September for Salesforce, also a member of the Dow 30. Always nice to have that with the wind at your sail as a member of any index as well. Well, this is going to be an interesting market, folks. We got the S&Ps back in the red. Be interesting to see if these areas hold. Like I was saying, 43.85, that or thereabouts. We're about 5 points above there right now. These are 5-minute bars we're looking at. We got about a 20-point range in the S&P, but we're only 17 minutes into trading right now on Jobs Friday. Crude continuing to hold up the gains right now. Gold contract pulling back as we've seen some market volatility. Gold back to about 1770 right now. As we jump to, I want to take a look at the dollar index real quick. Dollar index still down about 20 ticks right now at 94.01. And we jump to notes and bonds to see how this market is reacting, and almost a full give back. Look at that. That's no joke, folks. You're talking about 11 ticks in the 10-year. We trade up, we trade down. We're actually below where we were this morning right now. That's going to correlate to a yield. You're talking about above 1.6 right now. Now, right at 1.6, actually. 1.598 to be exact. 1.6%. Pulling up the 10-year, all right? Now, listen, I'm going to back this up. A long-term weekly to get the full move that we had, folks, from October of 2018 to the highs of COVID when rates were at about 0.5% or even less for a while. We've been chopping around, but look where we are. The 382 of this pullback was a nice area of support here. When we originally there, we did climb up to a price of 135.07. We've pulled back again. But we are in danger of breaking below these levels. You break below these levels, we do have this consolidation we were in for the better part of the end of 2019 coming into the beginning of 2020. But man, look at this on a weekly basis. That is quite a trend. We were just at 135.07 about 2 months ago, folks, and we've given up 4 points like that. All right, let's check around some of the other FANG stocks right now. We'll jump to Tesla shares. Tesla down about 1.1% right now. That's a little bit of a drop off on the open. And, yeah, we got all the markets in the red right now. So Amazon shares up by 0.25%. Microsoft shares up by 0.25%. Apple shares right now basically flat. All right, what else I have up here in terms of articles talking about Canada. So interesting dichotomy in terms of comparing, and, of course, very different economies. But Canada adds 157,000 jobs. They've recouped all of the pandemic losses. Check it out on the chart. When you're talking about Canada employment returns to pre-pandemic levels, this is Canada total employment back to 19.1 million. They dipped down to almost 16 million. They do have a higher unemployment number, though. I was reading this earlier. You're talking about unemployment rate falling to 6.9% from 7.1 in August. Hours worked up 1.1% in the month, but remain 1.5% below pre-pandemic levels. But our chart in the U.S. looking nothing like that. Meanwhile, we've got lower unemployment, but we got millions of jobs to make up. So a lot of different variables going into that, whether it's people out of the workforce or how that's contributing. A little bit of a different action from the U.S. to Canada, but they've gotten it all back, which is remarkable considering where we are right now in the U.S. All right, S&P is sitting pretty right in the middle of that range, 43.89 right now. 5 a.m., we were down to 43.82 in the S&Ps, but all the markets actually in the red. Let's check out the VIX as we go to the final break of the program. 1909 right now in that volatility index with the gold contract. Trading at 1772. Stay tuned, folks. We'll take a quick break. We'll be right back to finish up the program. Stay tuned, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 2 points right now. NASDAQ 100 negative by 14. Keep your eye on that area that I talked about in the S&Ps as we're near the lower boundary right now at 43.87. Jumping over to another story popping up here this morning. We'll stay on the Elon Musk story front. SpaceX, $100 billion valuation. They're going to sell up to $755 million in stock. And this is a private deal. It's not a public company yet. So they're going to sell investors up to $755 million in stock from the company insiders at $5.60 a share. That's going to value the company at $100.3 billion. That 0.3 at the end is $300 million company. Up from a $74 billion company in February. I mean, that's a staggering acceleration for a company that big. And as they state, that means SpaceX has achieved a rare status as a private company, a $1 billion unicorn, 100 times over, no matter what you say about Elon Musk, right? Started off with PayPal, almost lost it all with Tesla, and he's got SpaceX going as well. And SpaceX really is ahead of Bezos out there. And even Branson in terms of what they're doing and the contracts they have with the Defense Department, et cetera. I imagine that's why they're pushing a $100 billion valuation for that company. Pretty remarkable in terms of what Mr. Elon Musk continues to do over there. We'll jump over to Tesla shares. Today, though, down about 1% to 785. It's been quite a run, as I talked about in this company, though. from about 500 and change, 546 as recently as May. Seems like it might be 900, the next stop eventually for this equity, all upward action. All right, S&P's back positive by 143.90. We just might see consolidation today, folks. It's Friday. We've had quite a month in September. We come into the non-farm payrolls now for October. And, you look at it on a chart, we got a lot of jobs to make up. And, yeah, the revision in July was 1.1 million. But you're talking about August 366, September 194. This was not what was talked about, folks, in terms of the summer ending, COVID ending, schools getting back going, parents being able to send their kids to school to get back to work, the vaccine taking hold. Not quite what's happening on this market. What happens for the October non-farm payroll number coming up in November, etc. Thanks so much for starting your Friday with me, folks. Stay tuned. Live programming all day. Basil Chapman's up next with the opening call. We'll be right back, folks.